In this class, we are solving another question from WAEC examination May-June 2000. You can visit jarosconsulting.com to take a complete class on the topic that covers the question that we are solving. You can as well get my textbook by ordering a copy for yourself. It's 7,000 naira per copy, or $12 US. You can be nice by sponsoring copies so we can distribute to students for free. Okay, it's 6,500 naira or $11.5 US. So you can reach me on the numbers displayed, okay, or pay into the account numbers displayed in form of support, so we can get to work in terms of what free distribution. So the question is May-June 2000, and then we're looking at a question on trading profit and loss account and the balance sheet. Okay, I already taught that class on jarosconsulting.com. You can go there and then take your class, a comprehensive class on that. So here we're just trying to solve a question. So it says Audubako is a trader. The following balances were extracted from what his books on 31st July 19. So we have sales ledger, stock, trade, subscription, telephone and postage, travelers, commission, salaries, rent, purchases, printing, and all the ledger balances. So you should be used to that by now. If you have issues, take up the full class on jarosconsulting.com. So we have the balances listed, and then we have additional information. A is the amount owing by Audubako is on 31st July 1998, where rent 760, travelers commission 1230, electricity 112. I think that what we call outstanding or accrual. So I've also taught the class on accruals. You can take that class on jarosconsulting.com. So we have closing stock here. Our stock at 31st July 1998 to be 19,112. We have provisions for accounting charges. I've taught on provisions as well. You can make provision for expenses and make provision for income, like the way you make provision for bad debt and discount received and discount allowed. So we have that adjustment here as well. So we have depreciation here. Office furniture and equipment to be depreciated by 10%. I've taught the class on depreciation as well. So you can go to jarosconsulting.com to take the full class. So let's solve the question. So the owner of the business is Audubako. So the first requirement is saying that we should prepare trading profits and loss accounts, okay, for the year ended 31st July 98. So basically this is what we prepare. So I know it's just your normal buying and selling. So when you buy at a particular price or cost, you sell at a particular price, okay, so the difference is your profit. But because of the fact that we have various items, making up the sales, various items making up the cost, so we need to find a way to arrange these items, okay? So we have the first profit, and then which is called the gross profit, and then we have the net profit. The gross profit is simply the difference between your sales and your cost. And then when you now take out other expenses, okay, that are not directly related to the product, we now have what we call net profit. So basically, we're going to have notes to give us explanations on how we got the item. So the first item here is turnover. Your turnover is your sales, but we use turnover because it is possible to have some other items that can affect the turnover. So for instance, you have sales. You can make sales and then you have some returns. So when you make sales and have some returns, when you take out the returns, what you have is called net sales or turnover. So we can simply call this one note 1. So our note 1, we have sales. So if you look at the question, our sales according to the question is 307,442. So we have 307,442. When you make sales, it's possible to have returns. Okay, so we'll look at the question: is there any returns inward or sales returns? So I can see that there is no sales returns there. So our returns inwards, let's just leave it at 0. So that will still be 307,442. So it means that our turnover for this question is 307,442. So having derived the turnover, what's the next thing? We have our cost. or what you have sold has a cost. So let us see how we can derive our cost. We say cost of what? Goods sold, or cost of sale. So this is note 1. Let's call this note 2. So our note 2 will help us derive our what? Cost of goods sold. So what are the cost of goods sold? We're talking about goods that you have in store before you began trading for the year, additional purchases that you made. Is there any carriage, money spent in bringing the goods to the store? Is there any returns out of what you purchased? And then is there any unsold stock, which is the closing stock? When you put all this together properly, whatever you get, what we call cost of what? Sales. So let's go. We have opening stock. What's the opening stock according to the question? Opening stock here is 21,488. So we have 21,488. Okay, and then what's our purchases? Purchases in the question is 253066. So we have purchases 253,066. So let's add up 8 plus 6 here. So we have 14, 4. So 1, 8 plus 6 here is 14 again, plus 1, that's 5. We have 1 here plus 1 here, that's 5. 1 plus 3 here is 4. 2 plus 5, 7. Then we have 2. Okay, so we also check, is there any carriage inward? Is there any carriage inward? I cannot find any carriage inward in the question. Okay, so there's no carriage inward. Is there any return outward? Is there any return outwards in the question? There's no return outward. There's no purchases, returns. So that's it. There's none. So this is your cost of goods available for sale. So let's take out our what? Closing stock. Okay, our closing stock according to the question. Closing stock is 19,112. So we have 19,112. So let's take that out. 4 minus 2 here. So we have 2, and then 5 minus 1 here is 4. 5 minus 1 is 4 again, and then we have 14 minus 9 here, that is 5. Remember, 6 minus 1 is 5. Then we have 2. So this is your cost of goods sold. So this is what we have here as our cost of goods sold, 255442. So we have 255442. Okay, so if you take that out, okay, and this will not be your gross profit. 2 minus 2 is 0. 4 minus 4 is 0. 4 minus 4 again is 0. 7 minus 5 is 2. 10 minus 5 here is 5. So this is 2 minus, that's 0. So we have 52,000. This is your what? Your gross profit. Now, after deriving your gross profit, it's possible that the business has some other incomes. Okay, so we usually recognize that as other income, maybe discount received, commission received, and all that. But this question, let's see, is there any other income in the question? I can actually see discount received. Basically, discount received here is 1452. So you can say note 3, that's other income. So we have discount received. Discount received here is 1452. So we have 1452. Okay, 1452. So you can call this other income. So let's call it note what? 3. So we have 1452. So we add up, we have 2, 5 plus 4, 3, 5. Okay, 0 plus 2 is 2, 0 plus 5 is 5, 0 plus 4 is 4, 2 plus 1 is 3, that's 5. So this is what we call our gross what? Income for the period. So after deriving the gross income, what do? You take out your what? Administrative expenses or other expenses, rent, insurance, salaries, and all that. So let's call that total expense. That's note what? 4. So let's bring that here. Okay, so let's call that note what? 4. So what are the expense items? From the question, I can see what they call trade subscriptions. And then when you pick up an item, check out if there's no there's an additional information to it. When you get it, you adjust it accordingly. Okay, you can even take the complete class or comprehensive class on adjustment to final account on jarosconsulting.com. So let's take the first one there. I can see trade subscription. So let's call that TS. TS as trade subscription. That is 104. 104. Okay, no additional information on that. The next one is telephone and postage. So let's call that T and what? P. Telephone and postage according to the question 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 is 884. There's no additional information, so we have 884. The next one I can see travelers commission. Travelers commission according to the question. We have 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Travelers commission is 14,968. So we have travelers commission. Okay, but there's an additional information there. A amount owing by Aldo Baku on 31st July 1998. We are rent 760, travelers commission 1230, electricity 112. And I told you in my class on adjusted final account, when there's accruals at the end of the period, it is adjusted for, okay, in the balance or the list that is represented that expense item, despite the fact that the accruals is also what a liability item. So here we have to add since at the end of the reporting period. So we have travelers commission owing for 1230. So that will be travelers commission in travelers is 14,968. So we have 14,968 plus, okay, 14,968 plus 1,230 plus 1,230. So we have 1,230. So 8 plus 0 is 8, 6 plus 3 is 9, 9 plus 2, that's 11. Okay, 1 here, 4 plus 1, 5, that's 6, and this is 1, if I'm not mistaken. Let's add again. 14,968. 14,968 plus 0 here is 8, 6 plus 3, 9, 9 plus 2 is 11. Take 1 plus 1, 5 plus this 6, then we have 1, that's 16, 1, 9. So the next one here, I can see salaries. Salaries here is 10,432. So we have salaries. Is there any additional information on salaries? There is none. So our salaries here is 10,432. So we have 10,432. The next expense here, I can see rent paid. Rent paid here is 2,280. So we have rent 2,280. Then there's owing. Owing here is 760. So we add 760. So we have 0 plus 0 here is 0. 8 plus 6 is 14. Carry 1. 2 plus 7 is 9. Plus 1, that's 0. Then I think this is 3. Okay. So the next one here, purchases have been treated. Purchases are contract and that's creditors. Printing expense. Printing expense according to the question is 157. Is there additional information on printing expense? No. So we can say printing. So what are printing here? 1578. We have 1578. So the next expense item there, petty cash is an asset item. Equipment is an asset item. Electricity there is 812. That's an expense. Electricity is 812. So we have electricity. Then there's an information of what? Owing. Owing is 112. So we have 812 plus 112. Okay. So this will be 4. This will be 2. This will be what? 9. Okay. So the next one there is insurance. Insurance according to the question is 504. Is there information on insurance? No. So we have insurance 504. So what's the next one? The next one is miscellaneous expense. Miscellaneous expense here is 3046. Any information on it? No information. So we have miscellaneous expense to be 3046. So mis expense, excuse me, is 3046. So we have 3046. So the next one there, okay, we have drawings, that's liability items. We have discount allowed. Discount allowed. According to the question, discount allowed is 770. 770. So what's the next one? We have discount that will be treated. Discount will be treated as an income. Cash at bank is an asset. Capital, that's as a balance sheet item. Bad debt written off. Bad debt is, the debt that the debtors can no longer pay. So the business is saying that, okay, let's write it of our profit. So that will be an expense. So we have bad debt. That's 484. 484. So aside from this, we have some other additional information. They say provision for accountancy charge. Accountancy charge. So when you make provision for accountancy charge, it means that what? There is a service that the accountant or the auditor is rendering, okay, that has not been included in the list of balances. So any additional information is adjusted for. Okay, so they've not been paid, but it's an expense for the period. So we have provision for accountancy charge. Based on the additional information that we have 462. 462. Okay. And then we also make provision for bad debt. So we're saying that it is possible that the debt balance might not be able to take everything. So let's provide for it to cushion the effect on the what? On the bottom line. So basically, we can have provision for what? Bad debt. So bad debt there, provision is 580. So we have also depreciation. I've taught the class on depreciation. Go to jadosconsulting.com. Find a matter of fact, all the adjustment items, accruals, prepayment, bad debt, provision, they are all topical classes in jadosconsulting.com. You can check that out to take your class. So let's go. Depreciation, also a class on jadosconsulting.com. So let's go. Depreciation here. The question we should depreciate office furniture by 10%. So that will be 0.1 times 3240. Okay, that's what we have here. I can see that the office equipment here is 3240. So 10% of it is 324. So basically, this represents all the expense item, from the question. So let us add up what's the total expense here. Feel free to use your calculator. Okay, feel free to use your calculator. I'm using mine here. So our calculator here, we have 104. Sorry, 104. So having we have 104 plus 884 plus 16198 plus 10432 plus 3040 plus 1578 plus 924 plus 504 plus 3046 3046, okay, plus 770 plus 484 plus 462, okay, 462 plus 580 plus 324. So we have 39330. That's your total expense. So we'll come here, we have 39330. So let's take that out. Here, 2 minus 0 is 2, 5 minus 3 is 2, 4 minus 3, 1. Okay, 13 minus 9 here is 4. So 4 minus 3 is 1. Okay, so just a check, 5, 3, okay, 4, 5, 2. So we have 14,112. So this is called your net worth profit. But assuming that the total expense is more than gross income, it will become what? a loss, so we'll put it in bracket. So that is it for the trading profit and loss account. So let's quickly do the balance sheet. Basically, your trading profit and loss account, also called the income statement or comprehensive income statement, is only trying to help you derive your profit, which we have done. So your balance sheet now will show what? It will show your what? Asset and liability position, which is your financial position as what? A business. So let's do the balance sheet here. Okay, so let's say balance what? Sheet as at 31st July 1998. So we have what we call our assets. What are the assets? The first thing you have here is fixed asset, or what we call non-current asset. But let's use fixed assets, okay? Fixed assets, okay? So we can just put a note here. Okay, so let's say note 1. So what are, this is the third note here. So let's say note 4. Okay, so our note 4, which is our what? Fixed asset. What are the fixed asset items? We have, what do we have there? Equipment and office furniture. So we have equipment and what? Office furniture. So what's the cost? What's the cost according to the question? 3,240. So we have 3,240. Okay, but remember there was a depreciation that was charged, okay, in the expense. So that depreciation will reduce the what? The cost of the item. So we have depreciation, which is 324. So when you take this as 0, 10 minus 4 here will be 6. 3 minus 2 here will be 1. Okay, so what do you have here? 12. 12 minus 3 here, that will be 9. So we have 2. This is what we call net book value. Net book value. Okay, so that's what's representing your fixed asset here. So let us, okay, so let us put our fixed asset note here as what? 2916. Okay, so the next one is what? Current assets. So what are the current asset items? So let's call that note 5. So let's say note 5. So what are the current asset items? From here I can see sales ledger control. Sales ledger control simply represents your debtors. Okay, so let's say debtors. What are debtor figure here? Debtors, according to the question, is 28,860. Okay, we have 28,860. Okay, but remember there was a provision that we made here, which is 580. So that will reduce your debtors. So go to jadosconsulting.com for a full class on what bad debt and provision of bad debt. So let's go. Provision here is 580. So we have 580. So when you take that out, 0 minus 0 is 0. 16 minus 8, I think it's 8. 7 minus 5, that's 2. So we have 8, we have 2. So that's your debtor value. So the next asset item, according to the question here, I can see petty cash in hand. So we have petty cash. Petty cash, according to the question, is 32 naira. So we have 32 naira. So what's the next asset item here? Asset item, the next one I can see here is cash at bank. So we have our bank. What's the value for bank? Cash at bank here is 8464. So we have 8464. So what's the next one? Closing stock. Closing stock. So our closing stock, according to the question, is 19112. We have 19112. So is there any other item of asset that we've not taken? We've taken cash, we've taken petty cash, we've taken debtors, we've taken stock. So that's about all. So total, okay, total there, excuse me please. Excuse me. Okay, total there, we have 280 plus 32 plus 8464 64 plus 19112. So that's 55,888. So our current asset is what? 55,888. So if you add it together, you have 2916. So we have 58,804. So this is your what? Total asset. So let's go. We have our what? Liabilities. Now I told you your balance sheet is just, a statement that shows the asset and liabilities of the what? Of the business. So what are the liabilities? We have long-term liabilities, we have short-term liabilities. So here in the question, there's no long-term liability. What I can see here is just creditors and some accruals. So there's no long-term liability. So we just say what? Long-term liabilities, okay, is new. So let's go short-term liabilities now. So let that be our notes. Note 6. So what are the short-term liabilities? We have creditors. What's creditors in the question? The creditors, according to the question here, I can see purchase ledger control. Remember that the purchase ledger control is also called creditors ledger control. So they're just trying to use that to represent 12,358. We have 12,358. Okay. So we have what other liability items we have here? Okay, the owings. We have some owings there. So what are the owings? The first owings there, traveler's commission. Traveler's commission is how much? 1,230. Second owing there, we have rent. How much is rent? 760. Third owing there, we have electricity. Electricity there, what we have? 112. We also made provision for accountancy charge. That's more like owing as well. That has rendered some service that we've not paid for. We made provision for it. So accountancy charge is there. What do you have? That's 462. So that's about the short-term liabilities in the question. So let's add up. Let's add up there. We have 12,358 plus 1,230 plus 760. 760 plus 112 plus 462. So we have 14,922. So basically our short-term liability will be 14,922. So now we have the next, which is our capital, or you use the owner's equity. Let's call that note 7. So here, let's have note 7 here. And owner's equity is a function of what? The capital plus the drawings or any profit. Plus the profit minus drawings. So basically what I'm trying to say is that if you made more profit, it will increase your owner's equity. If you made loss, it will reduce your owner's equity. If you withdraw, that's drawings for personal, it will also reduce your owner's equity. We also call it director's corner. So let's just quickly do what we're doing. So we have capital here. The question says capital is 36,814. So we have capital here 36,814. So and then there is profit made. So our profit here is 14,112. 14,122. So when you add, this is 6, this will be 3, this is 9, this is 0, and then this will be 5, right? So 4 plus 2 is 6, 1 plus 2 is 3, 8 plus 1 is 9, 10 carry 1, 4, that's 5. Then we have drawings. When you withdraw money from the for your personal, it will reduce your capital. So we have drawings, sometimes referred to as director's current account. So what are drawings based on the question? Drawings based on the question is 7054. 7054. So when you take that out, 6 minus 4 here is 2, right? 13 minus 5, that's 8. Remaining 8 here, right? This is 8. So we have a 10 here. That's 3. Then we have 4. So let's try again. 6 minus 4, 2. 13 minus 5 is 8. Remaining 8 here. 8 minus 0 is 8. There should be 0 here. 10, 10 minus 7 is 3. So we have 4. So our owner's equity is 43882. So we have 43882. So let's add up. 2 plus 2 here is 4. 2 plus 8 is 10. Right hand 10. Carry 1. Okay, so 1 plus 9 here is 10 plus 8. That's 18. Carry 1. So we have 4 plus 3 is 7 plus 1. That's 8. 1 plus 4, that's what? 5. So this will be your what? Total liability. So basically, your balance sheet is showing your total assets to be 58,804. Total liability to be what? 58,804. So this is simply what we are trying to achieve by preparing the trading and profit account to get our profit and our balance sheet to show the total asset and total liability of the business. So basically, our tobacco has total asset of 58,804 and liability of 58,804. So at the end of the day, following your basic accounting equation, total asset should be equal to total what? Liability. So if you have questions, you can drop the questions in the comment section. I'll be there to reply you with the right answer. Don't forget, you can get my textbook. Okay, our sponsor copies. Okay, show us love, and then you can as well even just give us some support in whatever form you want. You can reach me on the number displayed on the screen. Let's discuss on how you can be of help. Thank you.